One more story about investing. Don't
I'll
have a
give you
spin
a
again.
non sequitur.
Non sequitur about investing in AI should be easy to find. This is from Reuters.com, Naomi Rovnick. Investors use .com era playbook. Remember the .com bubble was the early 90s.
In case you weren't alive for that.
Yep. And that was before the .com bubble and also before the real estate speculation bubble. We're actually in that real estate speculation bubble too. It's called the what we talked about a couple weeks ago. It's the the companies that are venture capitalists. Those assholes are ruining our economy and they're ruining the stock market and creating an artificial bubble. London is the byline here. It says London. Major investors spooked by AI exuberance, but yet wary of betting against it, are shifting from hyped up stocks into potential next in line winners, reviewing the strategy from the 1990s .com era that helped some sidestep the crash. As U.S. stocks have hit successive records and AI chip maker Nvidia's valuation has surged beyond $4 trillion. Oh boy, they're overinflated. Professional investors have been trying to find ways to make money from the bull market while avoiding excessive risk. That's what they do. They're rich assholes. They got nothing to do. Well, let's make some money, put people out of work. Let's go. Some of the looking back at the 1990s internet boom, which spread from startups to telecoms and tech, which were hedge funds, rode the wave. Hedge funds, again, are scary. Rode the wave by flipping out of highly valued stocks before they peaked and picking others that had room to rise. What we're doing is what worked from 1998 to 2000, said Francesco Sandrini, a multi-asset head of the Italy CIO at Europe's largest asset manager, Amundi. The highlighted signs of irrational exuberance on Wall Street, such as frenzied trading and risky options pegged to the share prices of big AI stocks. But he said he expected the new tech enthusiasm to continue and hoped to back gains via bets on reasonably valued assets that might rally next. Sandrini said that this involved trying to find the highest growth opportunities that so far the market has yet had failed to spot. I think that's a target of investors anyway, all the time, right? Let's pick that stock that's already grown 30% in the last month. No, you don't buy that stock. That stock's going to crash, man. You buy the stock that's on its way up. That's already up there going, wow, is that really worth $700 a share? I don't know, man. Be smart. Other investors are also expected to edge out Wall Street's Magnificent Seven stocks after shares of Nvidia more than tripled in 2 years, but want to keep their diversification with an AI spear. The Magnificent Seven is all a bunch of these AI stocks. They're overinflated, in my opinion. The odds of this AI boom being a bust are very high because you've got companies spending trillions and all fighting for the same market that does not yet exist. Again, we don't have a purpose for this shit. That's what I keep saying. Who wants this? Who wants this? Besides billionaires, who wants this? Anyway, this is the opinion of Goshawk Asset Management CIO Simon Edelson, who hits it nail right on the head. This market does not actually exist. It's all speculation. The stock market is pure speculation. Using it as a harbinger of the economy is a mistake. Anyway, this guy, Goshawk Asset Manager Simon Edelson, who worked on telecom IPOs at stockbroker Dresdner Kenworth Benson in London in 1999. He expected the next phase of AI fever to spread from Nvidia to others like Microsoft. Timing the phases of a bubble has historically been the way to play it without risk of trying to call the peak too early. A study by economists Marcus Brunnermeyer and Stefan Nagel showed that the hedge funds mostly did not bet against the .com bubble, but rode it skillfully enough to beat the market by about 4.5% per quarter from 1998 to 2000 and avoid the worst of the downturn. They shed high-priced internet stocks in time to recycle profits into others before they got caught the attention of less sophisticated investors. Again, the less sophisticated investors are your 401k people. I'm telling you. You take your 401k and they give you a choice. Oh, you can put it at mutual fund, that mutual fund, mutual fund. Not that money's in that mutual fund. Good luck changing it. Good luck. You're unsophisticated, and when the stock market crashes, you are going to be caught with all your money disappearing at once because it's in this one mutual fund that you decided was, oh, that's high profit making. I'm less sophisticated. I'm going to take advice from anybody. Those are the guys that are going to suffer, and Wall Street don't care. The rich guys at the top are taking their profits. They're gone. And let's do this about cryptocurrency, by the way. That's a bubble, too. That's exactly part of the AI bubble. They're not even mentioning it. The investors, these corporate criminals, right? They are trying to get everybody to buy cryptocurrency. Cryptocurrency relies on a lot of the power grid. They have to build these data centers just for cryptocurrency, folks. They don't do us any good. They're not doing us any good. And they're going to try to con everybody into buying this shit. And as soon as it gets really, really expensive, they're going to crash it on purpose and take their profits.
Yeah, it's called a pump and dump.
Do. Yep. Trump keeps doing it, by the way. He's been doing it the whole time he's been president this time. Crashing the stock market on purpose so his friends can get bargains. Yep. These were good profits to make for the fleet of foot, even during 2000 when the top came. Edelson and Goshawk said the current market environment was similar to 1999. He favored IT consultants and Japanese robotics groups that can potentially pick up revenues from AI heavyweights. Is what he said was a typical chronology of a market gold rush. When someone strikes gold, buy the local hardware store where the prospectors will buy all the shovels. That's what you do. You go to the gold rush, set yourself up a business for all these idiots are going to waste their money immediately as soon as they make it, right?
Yeah.
Oh, I struck 7,000 pounds of gold last year. How much money you got? Oh, I spent it all. Oh, okay, idiot. Investors are attempting to benefit from the trillions of dollars, so-called hyperscalers such as Amazon, Microsoft, and Alphabet. I'll bring this up. This is how Donald Trump got rich, by the way. His grandfather was got rich with a brothel in Alaska during that gold rush. So let's not forget, that's how Trump got his money, gold rush money. Fidelity International multi-asset manager Becky Quinn said uranium was her favorite new AI trade because the power-hungry AI data centers could gobble up nuclear energy. Right. Here you go. Yeah, because the AI data centers making your utility bills go high, but at least some rich people are making money off it. Hey, there you go. Kevin Thorzint, investment committee member, asset manager Carmignac, has taken profits on Magnificent Sevens. I just love the way they gloss these guys as magnificent. They're not magnificent. They're just rich assholes. Stop pretending they're magnificent. They're lying to you about their product. Okay? It doesn't do anything for anyone, anywhere. It's just stuff that's just going to get in the way of everything. It doesn't have a real function. Look at your spell check. It doesn't even work the way you want it to do. Why would you trust AI with anything? Asset managers are also concerned that the rush to build data centers could result in overcapacity as the fiber optic cable boom in the telecom industry. Yeah, everybody got fiber optic cables back in the 90s, thanks to Bill Clinton passing a gigantic bill. And it was supposed to give everybody fiber optic cable. Of course, the phone companies just took their little fee and did nothing with it. Yeah. If you're out in the country, you sure as hell didn't get any fiber optic cable. In any new technology paradigm, we don't get from A to B without the excesses along the way. Yeah, you could. If you weren't such capitalist pigs and only worried about stuff in your own pockets, you definitely could. You could definitely get the A to B with all the crap people taking and all that shit. Absolutely possible. You know that, right? There doesn't have to be the stock market involved at all. Even though AI stocks are like Microsoft, Amazon, and Alphabet are being powered by strong earnings, he still sees the building blocks of a bubble and favors Chinese stocks as a hedge of rapid AI advancements in China sap Wall Street's AI enthusiasm. So boosting China's economy. The rich people don't care where they put their money. Some investors, though, do not favor this relative value approach to AI investing as a way to mitigate future losses. Oliver Blackburn, a portfolio manager at Janice Henderson, hey Janice, how you doing? Said he was helping us. Oops, I just minimized my screen for some reason. Okay. Where was I? European Henderson said he was hedging the U.S. tech positions with European and healthcare assets, lest AI stock crashes take the U.S. economy down with it. Our U.S. economy is already down, buddy. You ain't got to wait for that. It's done. We're screwed. We're totally screwed. But yeah, it's just a matter of where the chips fall, right? He said it was impossible to forecast how long the AI craze would roll on because recalling the peak was usually only possible with hindsight. By the way, Wall Street, as soon as they find out something, it's already happened, right? Wall Street are not the head of any discovery of anything new. They just react. That's all they do. They just react. That's all they do. They don't pretend they're ahead of the curve somewhere. Nah, they're just reactors. All they are. Anyway, it says the final thing this guy said was, we're in 1999 until the bubble pops. There's your story on the AI bubble, which any day now, any minute now, it's going to go, wow, the stock market just dropped by half. Holy shit. And then there'll be massive layoffs because that's the only thing that happens, and the economy will completely crash. So... That's right. Stock options. You can borrow against stock options. That's good. But again, employees don't get stock options. As a employee who actually got stock for working in companies, they do not give you stock options. What they do is they give you common stock that you can't trade, you can't sell, you can only cash it in, right? Because you're buying it from the company, right? You're buying it directly from the company. Actually, you're not even buying it. Well, it's not even a scam. It's a way to avoid them being it is a scam. It's a way to avoid. It's a way to avoid a pension plan. There used to be pension plans in this country. Yeah, there used to be pension plans. Not anymore. It's a 401k and freaking stock giveaways. And our stock is only good. It's common stock. It's not preferred stock. So you don't get dividends on it. And you can't sell it necessarily on the open market. You can only sell it back to the company. So it's not really stock you can sell. So that's one of those things that's like, yeah, I'll sell back to the company. Of course, they'll give you the current price, but whatever. They've kept your money that longer, right? It's stock they can give away because they know they're going to get it back for pennies on the dollar anyway. Anyway, they've rigged the system a long time ago. Yeah. Yeah, pension plan would be nice. Yep. The shell game. The shell game, they're always pulling. They're always here. They tell you something. Rich people. Rich people, billionaires,